Good afternoon, everyone. Kimberly Sulfridge here with the Kids Money Project. I'm here with Paula Weiss of CNS Insurance. How are you doing today, Paula?
I am doing very well. Forgive my looking like I'm bundled. I have a small owie in my neck, so I promise not to make you feel too uncomfortable as we're, chatting about women and money and changing a mindset.
Yeah, I noticed you're kind of in a sling there. That does not look
Yeah, it's got a heating pad in there too to make it feel better. So
well, you won't be
I,
cold.
I won't. So yeah, I'm doing good. So I'm here because I think it's important that we've got a great topic to discuss today.
We do. We have kind of an interesting topic, I think, because I think
Yes,
it's one that most people probably don't realize,
in,
particularly. Oh, go
including
ahead.
us.
Right. Well, I mean, we've kind of talked about a lot, in the past weeks about how women tend to kind of push off a lot of the investing and stuff like that
Mhm.
to their husbands and even their fathers a lot of times.
Yes.
And but what we've come across is that women actually in a lot of respects tend to be better investors than men.
That's yeah, they do because they have the natural instinct that takes what you need to be a long-term investor.
Mhm.
And we were excited to see the results of how this worked. And I'm going to let you because you probably have the information in front of you and I don't.
Well, you're not moving around as easily as you normally do.
No, so
So.
I will fit in there when I can.
Well, so we went through, did a fair amount of research here, and we actually found a very common theme when it comes to why women tend to be better investors. And basically it came back to three different areas. So the first one was basically women don't tend to be overconfident.
Right.
Um, they they're a little bit more level-headed, I think.
Hmm.
They're tending to kind of look at the whole picture versus very short-term type things.
Yeah, they don't have that swagger of I know what I got to do and I'm going to do it right now.
Right. And then secondly, they tend to be a little bit more realistic and they're a little bit more risk adverse. So they're not taking quite these bigger risks. In fact, one of the articles talked about men tend to be about 45, or what was it? Men trade more, about
Yes.
45% more
Hmm.
than women because they're moving their stocks around, or not necessarily stocks, but their investments,
Yeah.
but they're moving them around to try to get better returns and stuff, which, that comes with other areas
Behaviors.
as well. Right.
Well,
And
they're more competitive and they look at it as a game instead of a long-term financial goal.
mhm,
And they're looking to drive that dollar and they don't realize that sometimes that costs them more by doing that.
right. Absolutely. Well, and you're going to have more fees and things like that are attached
Right.
to more trades. And so
Hmm.
suddenly your net, can start getting out of whack at that point,
Right.
depending on how many trades you're doing. So
Hmm.
something to consider. And then also three is women tend to research more
Yes.
and then ask more questions. So one of the articles mentioned that women were more likely to seek the advice of financial professionals. About 44% would seek out professionals, where most men would tend to kind of do it on their own.
Hmm.
And it's one of those things that, again, we've talked about it in the past.
Right.
uh, it's impossible to know this industry, all of it. That's why these professionals exist and why
Right.
we need to be reaching out to them.
And it's more about the stature of the companies. It depends on how you're looking to invest. But women tend to go with things that they're comfortable with, that they know the mutual funds or the stocks are. A lot of women are looking into sustainability and the environment, and they want to make sure they've got their funds dedicated for that because they're looking long term as to how it will impact not only themselves but their children and moving and grandchildren moving forward. So it's a different concept, but it was rewarding. And I think we were really pleased to see that statistic and to share that with you. So with the gals that we have that are sitting on the sidelines are saying, I don't know where to start, or I can't do it, or nobody can teach me. We're here to help you, but there's other resources out there too, knowing now that there is 48% of your women are out there investing, 48% or close to it, 30, I screwed
I
up my
don't
number.
remember that.
Yeah, but in the 30s. So there are women out there and they know that they can do it because they are planning for their future.
Mhm.
And this is what this is all about, making sure you can take care of yourself.
Absolutely. Well, and that was one area that it specifically mentioned that women do tend to invest more for the long term, and it tends to be for less monetary purposes versus looking more for like independence and security,
Security. Hmm.
what that money can do for you on that long term versus maybe focusing a little bit more on what that money can actually purchase you or buy for you.
Right. Goal oriented for your retirement
Right.
versus I need the new car, or or whatever. And that's not fair. I mean, I'm not picking on guys altogether. There's plenty of gentlemen out there that do long-term investing and they know
Oh,
what they want and it's a goal, but it's our needs are motivated differently and we react to them differently.
right. Well, I mean, we've all heard of the what is the book? Women are from Venus, men are from Mars.
Hmm. Yep.
Women and men are very different in how they think and how they operate, and that's no different in finances.
Hmm.
That's across most spectrums of just life in general.
Right.
And how we invest is going to be different. And oddly enough, when it comes to kind of this longer term aspect of maybe saving for retirement and that, a lot of times women tend to outperform men when it comes to that. And a lot of it has to do with the strategies that they take. They're
Correct.
not moving things around as much. They're more steady as the road. And that kind of the what was it, the turtle that
Yeah, the
um
tortoise and the hare.
yeah. And it's a slow road, but that's the whole point. It
Mhm.
doesn't have to be so up and down. We know the
Right.
market goes up and down, but if you ride it, then
Yeah.
it all levels out and on an upward stream just the way we need it to.
I might share, I believe I have a great brochure from Fidelity talking about staying in the market, what happens if you miss one day in the market, how can it impact you. And it doesn't talk about stock, it's just talking about investing overall.
Mhm.
And you never know when it's a good day to get out or
Right.
a better day to get in.
Absolutely.
So,
Well, I mean, we'd love it if we knew those days. I mean, we'd all
mhm,
do it, but unfortunately there's no little book or light or
no,
whatever to tell us when those days are. And
no, mm-mm.
missing one day could be actually, I'd love to see that article. I imagine that's pretty interesting.
Yeah, I will post it. I'll share it, but I'll post it because it might give you a different insight of why things happen the way do. And again, it comes back to compounding and longevity and keeping money invested in there so it can grow.
Mhm.
And yeah,
I'm
I was
sorry.
just going to say I was reading the book that I can't remember the name of, something about the prince.
Oh, it's our next book club
Yeah,
book,
it's
right?
yeah, but her comment was that when the market crashed in 2008, she called her broker and she said, sell everything. And he said, no, 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 you don't want to do that. And this is not market advice to anybody else, but because he said the market will come back. And she didn't have the opportunity because she was not in the position once she put it in on cash, it wasn't in the market. And coming back at the right time is always where the difficulty is. So she lost an opportunity and she said it devastated her and she should have kept that in there. Doesn't mean it's true for everybody. This is not advice for you, but it's just something that you need to look at as to why you need to stay invested long term.
Well, and it has to do with what your goals are for those
Correct.
different investments. A
Hmm.
short-term investment versus a long-term investment is going to be invested differently.
Correct.
And particularly for a long-term investment, there's no need to be cashing out unless it is your time to be cashing it
Cashing
out
out. Yeah.
because you're retiring.
Yeah. Good
And
time.
then you're not going to cash it all out at one time. It's you're going to
Yes.
set it up in a way that works for your lifestyle.
Hmm.
But yeah, there's your long-term investments are there for a long term. That's why a lot of advisors and things like that will tell you don't worry about where the market is when you're getting in,
Right.
because it doesn't actually matter. I mean, if we could pinpoint the lows and the highs, that would be fantastic. I would
Hmm.
love to have that ability.
You
But
mean you don't? No, I'm sorry.
I so wish I did, but I don't think it's gonna happen for me.
Right.
And
Hmm.
I haven't met the person that could either. I've
No.
met a few that
Hmm.
said they could. but but yeah, it's just one of those
Wow.
areas that if your investment is a long term, you know, let those ride out. take this last downswing with COVID that we had.
Mhm.
Um, and these are common. I mean, fortunately they're not, all the time,
Right.
but not that long ago we had that 2008 crash. Here we had the COVID, which was,
Mhm.
I guess the
Yeah.
crash really started in what, March of 20 is when that really kind of
Right.
started.
Yeah.
And that was kind of an interesting one because this was a different scenario than we had ever really
Right.
anticipated. And so it was uh, trying to, nobody knew how to, I would have
Right.
said that was probably,
Going to be the end.
well, I would have said that it wouldn't have come back as hard and fast as it
Right.
did,
Mhm.
because everybody was talking, is it going to be a V? Is it going to be a W? Is it going to be, all these
Right.
different ways that this was going to go.
Mhm.
And that just shows you nobody knew.
And
Absolutely no.
nobody do. And this was different because 2008 was a financial crisis.
Mhm,
In reference, this was man-made. We
mhm,
created this. We caused the crash per
mhm.
se, but they also knew that there was going to be a upside of the vaccine and companies going back. So, and there were 50% of the population worked from home.
Right.
Not everybody was unemployed
Mhm,
during this time frame, and hopefully they stayed in the market.
mhm.
But it's always a good time to sit down and kind of start planning for your retirement. Start planning for your future. Don't think of it as a retirement plan. Think of it as your future assets and your
Absolutely.
and your financial well-being in 20 years, in 30 years, potentially in 50 years.
Yeah. Hopefully in 50 years, because that means you
Yeah.
started early. That's fantastic.
Yeah.
We love
That's
it.
yeah, that's a good thing.
Yeah. But I mean, imagine if in that crisis you had gotten out after that market took the huge
Right.
hit that it took, and you got out afraid that it was going to keep going down.
Mm-hmm.
And it probably would have kept going down just a little bit at that point. But then you were out. You missed
Yeah.
that huge upswing on the other side
Right.
because who would have predicted when it was going to come?
Nobody could.
Nobody knew when it was
Mm-mm.
going to come, and you would have missed it.
Right.
And again, not only did you lose some and then get out, and so you're going, yeah, but I didn't lose that bit there. But the problem is when you got back in, you
It
missed
worked.
that whole upswing on
Right.
that side. And
Mm-hmm.
who knows exactly when you would have gotten back in,
Right.
when nobody knew for sure when it even started back up if it was going to
Right.
stay back up.
Right.
So
Absolutely.
those long-term investments, just go with them.
Long term.
Yeah.
Doesn't mean you don't need to rebalance and have a conversation. It
Oh,
just means
absolutely.
don't get crazy. And you, when you do this, you have goals. Anybody that's going to do it, and you look at what you want, and you want to be positioned in things that you feel are comfortable and you believe in, and it fits your narrative and what you're trying to accomplish. But
Mhm.
it's never too late to start, but it's absolutely never too early to start.
Right. Yeah, and when we do say that the don't get out, again, that does absolutely does not mean that there are not times to rebalance things, because there
Hmm.
absolutely are. One, you should be revisiting your investments and stuff at least once a year. There you
Correct.
should be looking at that, knowing where you're at. And of
Hmm.
course, there are certain times that you need to shift those. The older you get and the closer to retirement you get, you want to make sure that you're not too aggressive with your investments, because again, if we have these big swings like this, the more aggressive you're invested, the bigger that is going to
Right. The
hit you.
risk. Right.
Yeah, and so you don't want to be, 2 years from retirement and lose 50% of your
Yeah.
portfolio because you were aggressively invested. That,
Hmm.
I mean, well, that happened to a lot of people
Yeah.
in 2008. I know some personally that happened to.
Mm-mm.
And that changes your entire life at that point, because chances
Yes.
are you can't retire.
Or,
Um,
the way you want to retire, or
right.
yeah. So
So yeah,
that's
we're definitely not saying leave it in there and never look at it again.
no,
Don't do
no,
that.
no, 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 no. But this was telling you, women out there, there are women doing it now in the market, and they've got a plan, and they've got a goal, and they're faring better than their male counterparts in most
Yeah.
cases. And maybe we can put the links to the articles we've seen,
Yeah.
so you can um, read the articles, because they're worth a quick read, to if you need to feel empowered or encouraged that you can do it. You can do it. This is the time.
Well, it basically kind of reconfirms that there's nothing to be scared of.
Mhm.
It's not this big ominous thing sitting out there that you can't learn.
Right.
Uh, a little bit of reading, understanding, a handful of terms and how things work, you would be amazed at what you can do with that. You couple that with talking to people in the industry, like a
Mhm.
financial advisor or consultant, things
Mhm.
like that, that can
Mhm.
help you put your investments in what again works for your lifestyle, and you've
Yeah.
got it.
Mhm. Don't be afraid to ask.
Yes.
Don't be afraid to ask any question.
Remember,
And
that's what makes us better investors at times.
that's
We're
right.
not afraid to ask.
That's right. And if you don't like if you don't like the answer, you're not comfortable, continue to ask again. And
Mhm.
I'm not saying ask till you get the answer you think you need, but
Right,
answer till you find out all the points that that you just don't understand, till you
right.
get something that makes sense.
Absolutely. But so there you go, women. Turns out we're pretty darn good investors out there. So let's keep
Hmm.
it up. We definitely need to get ourselves in the market and be more independent with this stuff, and take more control out of our money.
And share this information with your girlfriends, your friends, your granddaughter or your daughter or your goddaughter. And not that your boys shouldn't know this either,
Right.
but empower the girls to know that they can do this. And
Absolutely.
that would be the best give you could give them today if you share that knowledge.
Well, believe it or not, there's a lot of women that don't go into the financial industry. It's always been a very heavily male dominated
Yes.
industry.
Hmm.
And, and here we are looking at some statistics that actually show there should probably be a lot more women in this industry
Hmm.
just because of their natural ability or their natural advantage that they have in a lot of areas.
Right.
So,
Hmm.
consider that. And we're actually, I'm actually helping moderate a panel that's actually talking about women in finance. And
Hmm.
excuse me, my voice is trying to go. But talking to that younger generation so that they understand that this is an option for them and to at least look at it. It may be for them, it may not be, but
Hmm.
we have some great women that are going to be sitting on that panel. So there's a link and everything. I even created an event that I'll share over to
Oh,
this group. So if you're interested, that'll actually be next Thursday night on April 8th. So if
very
you're
cool.
interested, you should come check it out. But until then, we need to have more women investing in there. So
Hmm.
stay tuned for more information. And
Yeah.
do you have anything else, Paula, you want to add?
No, not at all. Just if you have any questions about any of this, please don't hesitate to reach me at talkmoneywithpaula.com. And I haven't put my information out there lately. And you can reach Kimberly at the Kids Money Project, and also Mommies and Money. You can reach both of us.
Yeah.
So have a great afternoon. Be safe, have fun, and we will see you next Wednesday.
Yes. We'll see y'all later. Have a good day. Bye bye.